Okay. I'm going to work off of my photocopy as well. So there were 2 transactions related to the payroll cycle in our transaction listing. One of them occurs on December 20th. It's transaction number 8 in the blue document. So transaction number 8 says on December 20th, we increased our employee pay rates effective for the second pay period of the month, which is the one we'll do in the second payroll transaction. And there were no changes in filing status or withholding allowances. It gives you a hint, no accounting entries are necessary, but you must update the pay rate history information in the employee earnings subsidiary ledger. So let's take a second to look at some of those ledgers. So here is this is page, it's in the ledger book for your systems understanding aid. It's page 19 towards the very end. And we have information about our 3 employees. We see that Ray Kramer, the boss, is paid a salary. He gets paid twice a month. And the other 2 employees are hourly. Nancy's a relatively new hire. She got hired in October, whereas Jim's been around at least 3 fiscal years. And we see their hourly rates there. So the only thing we need to do for this first transaction is to update their pay rates. So when we use this to prepare our month-end payroll, the rates are accurate. So we have Ray Kramer, and now he's getting $36.50. He's receiving his pay semi-monthly. He's still married, is what the problem prompts told us. He has 2 withholding allowances, and the payroll takes effect on 12/16/22. And I like that he's the one approving the pay raise. I don't know if you knew this about, if you've taken a civics class, but the United States Congress votes on their pay rates. And like, yeah, why would they ever vote against a pay raise for themselves? And like he's doing here, why would you ever not sign off on a pay raise for yourself? So Jim is now, he got an 80-cent per hour raise. And we can complete that table. He's single. 2 allowances. Takes effect this next pay period. And Nancy, she got a $1.30 pay raise. Married with 3 withholding allowances, and her, not bad. Any questions about that? So this is our reference table, so that when we prepare our subsidiary ledgers for the 3 employees, and we have one for Ray, we have one for Jim, and we have one for Nancy. And when we update the payroll and the cash disbursements journal, we have those as records. So I'm going to take a little bit of a diversion before jumping into the processing of payroll and do some, this is an audit technique called tracing to show you what happens in the previous pay period. So that way it'll make entering it in this pay period a little bit easier. So here's our pay rate history that we just updated. We're going to refer to the preceding period's pay rates. And here is the payroll journal. So we start with Ray. And we see that Ray earned regular pay of $3,500. So this is from, just say to the payroll. This is it's in the journal book and it's page 15. See, Vaughn, do you need a copy of the payroll? So here's what we see in the payroll journal. Ray earned $3,500. That was his gross pay. And here's his pay rate here. So we can, I'm just going to mark here, since this is my copy, that we got that from the payroll journal. Like we talked about on Monday, the gross pay is what gets reported in our payroll expense for the period. And all of these deductions are deductions for Social Security, for Medicare, for the federal income tax. They're in Illinois, I believe, so for their state income tax. Those are all deductions from payroll that are reported separately from the payroll expense. So here's his earnings subsidiary ledger from the previous period. Oh, it's not level at all. So we see, oh, I bumped that. You see he earned $3,500 gross pay. We recorded $217 for FICA, and this is 6.2% of gross. His Medicare is 1.45% of gross. And then luckily for us, when we go to record our payroll transactions at the end of the month, they give us in the prompt our federal income tax amount to withhold and our state income tax to withhold. Because otherwise, let's see, I know, Madison, you do tax stuff, right? How tricky is it to figure out the withholdings? I mean, you have tables, right? Okay, that's true. Gotcha, gotcha. Anyone else have experience recording payroll or, yeah? That's true, yeah. Yep. IRS has, we talked about that on Monday as well. I think it's Schedule E, maybe? Well, it's a little table that shows you what amount you should withhold. Well, okay. Okay, perfect. Even better. Even better. Like I noticed my most recent, my January paycheck. I'm like, why is, not that I'm complaining, but why am I getting $40 more this paycheck? Yep. Oh, yep. Yep. So my reason was because, well, the IRS updated their withholding tables and Congress increased the amount of the standard deduction. So combined, that meant, oh, I see $40 per paycheck more now. Like, oh, that's my weekly Starbucks bill. Perfect. Yeah, exactly. Exactly. So here we see the amounts tie between his subsidiary ledger and the payroll journal. So there's our 217. Our 217. So I'm going to put, I'll just use the same, since I'm just showing you ticking and tying right now. So we can see where each of these numbers are coming from. Actually. So then he gets whatever's left over, which in this case is 2765.38. And here we see 2765.38. So now we can see how the employee earnings subsidiary ledger flows into the payroll ledger. Let's take a look at now the cash. Okay, and if we were to summarize on the monthly basis, which we'll do at the end of the month when we record their total payroll for the month, we would take this number here for the monthly total, and we would then go on to write checks to the respective people who are owed money. So let's take a look. We haven't done December yet, but we did do this process in November. So here we see our, wait, did I not give you that? No. Apparently I didn't photocopy a section of that page for myself. Here we go. So here is the preceding month's cash disbursements journal. And here's our preceding month's payroll journal. And we can see that at the end of the month, we wrote a or not. Never mind. We would defer to this after all. So this is why so I thought let's do a quick walkthrough before we jump into doing it for realsies. But anyway, you can see on the cash disbursements journal that we do make certain payments to remit payments to the IRS. This, the 3066.32, that is the sum of no, that's a quarterly withholding. So let's try this again. Now that I have you thoroughly confused, let me see how much worse I can make the situation. All right, so the final transaction, and the point I was trying to make there is that they really, all three of the journals do flow together. You need to see the employee journal to prepare the payroll journal, and then you can also use that to see the cash flow coming out. The cash flow that we had that I was trying to show you was actually the employer's portion of withholdings. So we'll get to that at the end of the monthly when we do the month-end procedures. So in the meantime, let's see what it would look like to actually record our payroll, which is transaction number 20. And we were provided, we know that Boss Ray is provided, he's on a salary basis. But our other two employees, I put them on one sheet. Here's Nancy's pay card. It's document number 22 from your document list. And you see that Christmas falls on a Sunday in 2022, which means they got the following Monday as a paid holiday off. And she worked a total of 94.7 hours. Her pay period was based on 11 working days because they're paid twice a month. So there were 88 hours was her normal rate. She earned an additional 6.7 hours of overtime. Here is Jim's pay card. He also, same length of pay period, also eligible for 88 hours of work time. He completed 9.3 hours of overtime. So let's take a look at what that process is. So we start with Jim Adams is the timekeeper. We start with him printing the time record reports, which he has for himself and Nancy. And we've got a note here that Kramer approves and initials each employee's time record report. What is that an example of? An example of an internal control. And what type of internal control is it? Yep, an authorization control, exactly. From there, Jim would calculate the payroll using the wage and salary information that we updated in the employee's earnings subsidiary ledger. And from there, he would enter the payroll information in the payroll journal and the employee earnings subsidiary. The approved time record reports get filed. And once we record the journal entries, we begin the process of actually issuing the payroll checks. The check numbers are recorded in the payroll journal and the cash disbursement journal. And then the amounts and the date is recorded in the employee earnings subsidiary. And Ray does a review of the payroll journal and signs the check. Another example of a supervisory review, which is a what? Internal control, exactly. And then at the end of the process, the employee signs the time record report acknowledging hours and the receipt of check. And the employee takes their check and pays bills and whatever else they do with that. So let's try to dig in and do this. So we start with, it tells us in the prompt that we received the time cards for Ford and Adams, and Jim is now in the process of preparing the payroll for all three employees, including the paychecks. And they provided us the federal and the state withholding amounts. So the helpful hints say the paychecks are considered mailed and given to outsiders, and the time record reports are filed in the accounting file tab. So the first step would be to calculate the payroll. So let's You do, yep. You get to play the part of all 3 of the employees in this simulation. So let's start with Nancy. We just updated her rates. I believe she made $18.30 per hour. So 18, and she worked, what does she earn? Overtime. So she worked, we just updated her hourly rate. Her normal base rate is $18.30 per hour. She worked 88 hours at that rate, and she worked 6.7 hours at her overtime rate. So that's So her overtime rate is $27.45. That's 1.5. So that's what I get for her hourly pay, or her total pay for this time period, which would be for a total pay for the pay period of $1,794.32. So we're told that her federal withholding is her federal withholding is $78. Her state withholding is $74.74. So now we need to compute her Medicare and her, the other one, oh. Her Social Security and old age and disability insurance. So this is based on 1.45% of her gross, which is this. And her Social Security and old age and disability insurance is based on 6.2% of her gross. So my goodness. I get 26, call it 2602 for her Medicare. And my handy dandy answer key says you should get 111.25 for the Social Security, which means her net pay is 1,504.31. Any questions about how we got those numbers? So that's fine. Nancy's, okay, let's start with so let's start with each of the three employee earning subsidiary ledgers, and then we'll post the totals to the payroll journal. So here's Nancy's subsidiary earnings ledger. And on 12, that should be 12. That should read 12/16/22 as the start of the pay period, and 12/30/22 as the end of the pay period. She worked 88 regular hours. She worked 6.7 overtime hours. And we can just populate these numbers with the numbers that we just calculated. It would, yes. Mm-hmm. Oh, you're right. I was right the first time. It was 12:30. So again, her gross pay, that's what is eventually going to show up in our income expenses. So her gross pay, we calculated as 1,794.32. Her Social Security was 111.25. Her Medicare was 26.02. And we're given her federal income tax and her state income tax of 78. and 74.74. And her net pay is $1,504.31. Any questions about how we computed her payroll figures and transferred that to the subsidiary ledger? All right. Let's do Ray's now, because Ray is a salaried employee, which is going to make our calculations a lot easier, because we know he's receiving gross pay of $36.50. That's what his new payroll rate is. So we would record it as of the end of the period. We pay him on the same day. So let's do the easy two first that they gave us in our prompt. And withholding. So for Ray, we withheld $321 for his federal income tax. And we withheld 17109 for his state income tax. So that's, again, the Social Security portion of his FICA tax is 6.2% of his gross pay. His Medicare tax is 1.45% of his gross pay. And we take it off of this new number. So let's do that calculation. I get $226.30 for his Social Security portion. And I get $52.93 for the Medicare. What's his gross? Has anyone calculated that yet? No, I'll find it in my. I get his net pay. His net pay was $28.78.48. Any questions about Ray's salary and the withholdings therein? All right. Well, I'm going to give you like 2 minutes, 3 minutes, couple minutes to do Jim's on your own. Jim is an hourly employee, so his is going to be computed a lot like Nancy's was. And I'll keep an eye out, and it looks like y'all are wrapping up. I will flash the answers from my handy dandy teacher solution manual. Okay, it looks like Madison's done. How are the rest of y'all doing? Give you like, do one more minute to wrap it up and I'll show you what it should look like, and you can use that as a check figure if you didn't get it all the way done. So this kind of computing for Jim's payroll was kind of depressing for me because here's what the solution looks like, and I'll zoom in a little bit. You can see his prior period pay. He got an 80 cent per hour raise, and he worked 2.3 fewer hours of overtime, but he got a big raise. So his gross pay was the summary of his base salary hours times the number of regular hours he worked. His overtime salary was $32.70, which is 1.5 times his base salary, times the number of overtime hours he worked. And there's what the gross would look like there, $2,222.51. So after his big deal raise, his gross pay was a whole $9.11 higher. So then let's look at the different withholding taxes. We were given these two. So those were easy. $205 were withheld from his federal income tax, or for his federal income tax. $100.63 were withheld from his paycheck to pay the state taxation organization. And you can see that they got an increase in their share too. His FICA was 6.2% of his gross wages, so $137.80. And his Medicare was $32.23 of his, which is 1.45% of his gross pay. So that his take-home pay at the end of the day was a whole, not even $6 higher, $5.95 higher, it looks like. So, yes, it's kind of depressing that everybody has their hand in our paycheck, but I'm an optimist and I like to believe that our taxes make for a better society. At least that's what I like to tell myself. Any questions about how we computed each of their monthly payroll? All right. So Friday, we'll wrap up the payroll process. We'll summarize their subsidiary earnings ledger into the payroll journal, and then we'll write the checks to them and the appropriate taxation authorities. So we'll look forward to that. Like I said, don't forget, again, noon back here if you want free lunch. There'll be Chick-fil-A. And tomorrow, 11 a.m. is the Derek Bennett lecture that you can earn extra credit for attending.